Hi everybody, welcome back. This is Kylie Smith with Coldwell Banker Wood Doolahary Real Estate in Parsons. I'm on video number 3, and today we're going to be talking about what type of loans are available that are out there for you. First of all, I also wanted to explain to you what closing costs are and also what PMI is. So first of all, closing cost, as I mentioned in the videos before, it's really important to maybe understand how much it's going to be for your closing costs, and also if you're going to have PMI or not. And lastly, the other thing is to understand what type of loan that you're going to actually pre-approve for. So closing costs are basically the miscellaneous fees that the lender is going to be charging you to process your loan. It's going to be the fees that the county is going to be recording your deed, the title company, all of those things, that factor into buying your house are your closing costs, okay? And when you get pre-approved for your loan, your lender is going to do something for you called a good faith estimate. And if you don't get something like that from them, ask for it. But what that is basically it's going to be a breakdown of all your costs. It's an estimate of what your final costs are going to be for that loan that you're getting, okay? It's going to give you an estimate of what your closing costs are going to be. It's going to be an estimate of what your down payment's going to be. It's going to be an estimate of what your monthly payment's going to be based off of your taxes and insurance and the amount of the loan that you got, okay? So those are your closing costs. The other thing is private mortgage insurance. Okay, private mortgage insurance is basically, and I actually have a definition here. When your down payment is less than 20%, you usually have to pay mortgage insurance, which is PMI. This protects the lender in case you don't make your payments and they have to repossess your home. So basically, if you default on your loan, it is insurance for your lender, okay? And if they have to resell your home because of foreclosure. So it protects the lender if you default on your loan. Normally they require PMI when you don't pay 20% down on a property or on a loan, okay? So that is that, and I just hope that kind of helps you out a little bit with the terminology that gets thrown around. So let's talk about the different types of loans you can get pre-approved for. So one of the most common ones is getting pre-approved for a conventional loan. Okay, a conventional loan basically is a loan through a lender that is not backed by some government agency. Okay, conventional loans usually require a down payment, and normally they're around 20%. But every lender, every bank is different, and they have different requirements in order to qualify. So we love conventional loans, love them, and the reason why is because they have less requirements from the lender for the house that you're buying. So one of the main requirements for your home is just that it just appraises to what the contract value is. So conventional loans are great. Normally you pay less over time because you have a better interest rate, or you're paying down, have a bigger down payment, which sometimes, some people can't do. But if you can do it, you're actually going to pay less in the long run because you're going to have a lower payment or a better interest rate, or you're not paying for 30 years, So it's a good thing there. So it's a good option to look into. The other types of loans, or loans that you can get, are basically government-funded programs. So one that's really familiar to everybody is FHA loan, which FHA is here's the actual definition if you want to get really termsy too. So a mortgage issued by federally qualified lenders and insured by the Federal Housing Administration, which is FHA. So they are designed for low to moderate income borrowers who aren't able to make a large down payment. So FHA loans allow the borrower to borrow up to 97% of the value of the home. So this is a great program. When I bought my first home, we did an FHA loan. So, it was wonderful. We didn't have to have a super huge down payment. So, that's FHA. And then another really common loan that we are used to a lot in Parsons is called Rural Development or USDA loan. And that is a 0% down loan. And USDA loans are mortgages backed by the U.S. Department of Agriculture as part of its USDA Rural Development Guaranteed Housing Loan Program. USDA loans are available in home buyers with below average, offering 100% financing with reduced mortgage insurance premiums, and feature below market mortgage rates. This is a great loan too, guys. I mean, we live in a small community and it actually qualifies for rural development. There's some places that you can't get rural development loans because of where they live. So if you live in a bigger city, most of the time you can't get that because these loans are supposed to provide people to buy homes in smaller areas or rural areas in the country. We deal with rural development all the time. It's a great loan choice if that's the route you need to take. And then the next one is a VA loan. A VA loan is a mortgage loan in the United States that the United States guarantees by the U.S. Department of Veterans Affairs. The loan may be issued by qualified lenders. The VA loan was designed to offer long-term financing to eligible American veterans or their surviving spouses. So in order to qualify for a VA loan, you have to have served for our country, or you have to be a spouse of somebody that also served for the country. Another thing about VA loans, and I learned this the hard way, is that in order for you to actually qualify for a VA loan, you have to get a VA eligibility certificate, and you actually have to apply for that to get that from the VA. And then secondly, so you get this certificate, and the second thing you have to do is actually go and apply for lending through somebody that offers VA loans. So there's two different things there. So I actually had a gentleman that kept on telling me repeatedly that he was approved for a VA loan. Well, he was approved, he got his VA certificate that he was able to go get a loan, but he actually never got approved for a loan. And so there was miscommunication there, and then we learned after he made an offer on the house that he actually didn't have a lender. And then, long story short, unfortunately, he wasn't able to get the home because his credit was bad. So that's another good reason why getting pre-approved and knowing that you can actually get the loan is highly important. So there's advantages and disadvantages to everything and every loan that you can get. But there's some things that you also need to understand. On government-funded loans, there's requirements that not only you have to meet in order to get approved for the loan, but once you get approved for the loan, the house also has to qualify. Okay, so normally, let's say that you have a rural development loan. You got approved for $60,000 for a rural development loan. Okay, now, and you want to go look at houses. It's highly important that you tell your realtor what type of loan you got approved for, because they're going to help you in this process, because they're going to know what types of house you should be looking at. Okay, they can't be fixer-uppers, unfortunately. Rural development, FHA, VA have requirements that the house have to meet, and they really like move-in ready homes, things that don't require a lot of repairs, no roof issues, no chipping or peeling paint, no bad siding. So those are some things to think about, because the house really has to be move-in ready. So you really can't be looking at homes that are, fixer-uppers, or we know that's going to require a lot of repairs. Okay, with a conventional loan, that's really not an issue. You have a lot more freedom with conventional loans. The main thing that we need to worry about, though, is that the house appraises, and most of the time, with how it's listed and that type of thing, that's usually not an issue, but sometimes it can be. So we just want to make sure that the amount that the contract is for is what the house appraises for with conventional loans. So anyways, guys, I hope that was helpful. Always let me know if you have any questions. Comment on these videos. I will do my best to get back to everybody and answer people's questions. And thank you so much. Have a great day. All right, bye-bye.